Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no hype financial channel that is mission focused on finding you exceptional companies and unrivaled investments. Today, I'm very excited to bring to you Roblox. The ticker is going to be RBLX. They just filed their initial public offering documents, so they're going to be going public shortly. It's a company that's enabling the metaverse, which is this 3D universe that's just ever there, that can thousands, millions, billions of people can be using at any given point. And here are the games that were recommended for me when I last logged in. I just started logging in recently. But before digging in, a quick plug. If you enjoy learning about potential multi-baggers, please subscribe. If you're already a subscriber, I love the love, hit that thumbs up. And if you want to follow my personal journey to follow these types of multi-baggers, the types of companies that can go up potentially hundreds or even thousands % over time, go to unrivaledinvesting.com, click on journey. And by the way, this is not the first video I've done on the multiverse and companies that are enabling it. Check out Unity, which is a really exceptional company. I did a video on that previously, and I'll drop a link to that video below. So what is Roblox? It's a global platform that enables the creation and gameplay of millions of games on virtually any platform. You have 36 million daily active users. Holy smokes. On average, these users play 2.6 hours a day. So they are really involved, really engaged. I mean, if you log into Roblox, these are the games that are listed as the most engaging games. And you can see at this point, nearly 11,000 users were playing at that given time, and 45,000 users were playing this game. But first, let's take a step back. How is this all possible? And to understand Roblox and how they're making this all possible, you should start with their programming language, Lua, which is free. This is something that Roblox has made possible, and it's free, it's fast, and it's easy to learn. So if you have a language that they're making free to users and it's supposed to be easy to learn, you're talking about the entry-level users. You're talking about teenagers, even preteens, learning how to code. This is the way to start. You're not talking about super fancy, big budget games like Unity and doing super challenging, crazy 3D stuff. You might be talking about entry-level development of a game. And that's the commentary and theme I've seen consistently with Roblox versus other companies like Unity. Unity develops, 50% in the major big budget games. So here, this is sort of the opposite model, but we'll get into that in a second. So if you have this free and fast and easy to learn programming language, what's it enable? It enables an army of developers, and that's exactly what you see with 7 million active developers across 170 countries building 18 million experiences. And it's really key that management uses the word experiences, because it reflects that a lot of these experiences aren't really full-fledged games, or it's not like the incredible game experience you might have mentally associated with playing something. So here they're saying, hey, it's an experience, but 18 million of them, holy smokes. And you can see, just looking up Army, these are all the things that popped up when I hit the search engine, hit Army. And honestly, look, a lot of these aren't that interesting. They haven't gotten great reviews. You got 32% for this scary looking Peppa Pig. I do not remember reading Peppa Pig and seeing this crazy. If this was a kid's Peppa Pig, that would give me nightmares, man. And then you see the player count, 14 players, 17 players. So it's not crazy popular stuff. And honestly, it strikes me as the opposite of the hits-driven business model. Let's start thinking about YouTube versus Netflix. Netflix, it's hey, we're willing to spend crazy dollars on creating this content because we know it'll get tens of millions of people around the world interested in it. And what's this mean about the business model? And, once again, thinking about YouTube, it's about enabling lots of mini celebrities. You create very niche content which drives users, and you create this sort of multiple network effects. You have developers and creators. They're able, because they have this free and easy programming language, they're able to create content fairly quickly. That's super interesting. You get a lot of players. It's a lot of content, 18 million, different experiences. So you get a lot of daily players. You get 36 million daily players. And then these players, they tell their friends, hey, you're a teenager. You look at what I just built, or look at what I'm playing with. And you do live chat with your friend of oh man, let's go into this room together. And so, it's sort of this rinse and repeat approach of create content, you get the social, this virality aspect of the more content you create. And there's a reason why platforms are worth so much, is because it's so hard to unseat them. Once you get these favorable flywheels going, it's really hard to stop it. And so it makes me wonder, does this company have 10x potential? That's a key filter I look at for all my potential unrivaled investments. And YouTube, that's the model I mentally keep going to, has over 1.3 billion daily users. So why not Roblox? Once again, it's about getting your attention. A lot of these experiences, it's not supposed to be heavy duty gameplay. It's recreational, free, in your free time. And currently Roblox is at 36 million. You can see how it's grown over time from 14 million to 24 million. Keep in mind, this is first quarter 2020, pre-COVID made, for the most part. And so that's pretty strong growth. You're talking about, at least 50% growth, and then another 50% growth from first quarter to second quarter. Driven primarily, I'd argue, by COVID, where, you get a lot of parents that are like, oh my gosh, my kids are home. What am I going to do? Hey kids, why don't you learn how to program some computers? Program some games. That's educational. And here's my credit card. And so that's what I understand with the daily active users bump. But even if it's like 1/3 of what YouTube is at currently, and keep in mind, YouTube's still growing very quickly, then you're talking about a potential 10-bagger, when you're looking at this, in terms of what it could be in the years ahead. But wait, what's Roblox's business model? And it's about buying or subscribing to Robux, their virtual currency, which can be used on exclusive content within these experiences, or you can customize your avatar. And you can see for $4.99, you get 400 Robux, or you can subscribe per month and you get the 450, the old subscribe and save model. But keep in mind, Roblox is creating the content, is not creating the content. It's the army of developers and creators that are creating it. Roblox isn't creating it, just like YouTube. YouTube is not creating the content. Its army of creators are. And so, the developers receive 70% of the Robux spent. So in other words, Roblox gets a 30% cut on the in-experience Robux that's being spent. So that's how Roblox is getting their money, is they're getting a 30% cut from the developers. The developers are the folks that create these experiences, and the creators are the ones that create avatars. That's sort of the differentiating line that Roblox talks about. Creators receive 30%. So in other words, Roblox gets 70% cut on avatars. Sheesh, that's pretty high. And I thought Apple's 30% App Store cut was pretty hefty. But, despite those hefty cuts, year to date 2020, September, through September 2020, developers and creators earned over $200 million. So it's really important to see, that's a huge amount of money for a lot of developers, a lot of creators. That reinforces this beautiful flywheel where you're going to get more content development in the years ahead. More content development results in more creation, more interest, more users. So you're getting this flywheel, because 209 million, that's the amount that of some of these major game companies in terms of how much they spend on a game. So here it is, it's being spent on all these developers and creators creating stuff. I don't know why they're targeting Lil Nas X when I log in. Do I really have that Old Town Road look to you? Does that Anywho, Roblox has done even better though. When you look at this, where the Roblox rocket, where their revenue is 488 million in 2019. Bookings grew 171% year to date 2020, and you can see the bookings were 458 million to 1.24 billion year to date. So 170% growth in bookings. That's incredible. The revenue versus bookings is actually really confusing with this business, and we'll get into that in a second. So who's actually driving all this growth? What's driving the Roblox rocket? And over half the users are under 12 years old, using their mobile phone for the most part. And that's when I see a business model where most of the users are super duper young, only 33% of the users are over 17 years old. It makes me wonder, what types of risk does this create? And what happens when the user base matures? Surely when you're a kid using a phone, you're going to have different behaviors when you're older, because teenagers change. And this ties to the revenue aspect, where Roblox had revenue of year to date $588 million, which is up 69% year over year. That's fantastic growth. But this is way different than you might expect in terms of in terms of how you think about revenue. Most people think about revenue, it's very simple, like what was your cash in, or what was your receivables created. That's not how this business works. It's based on the expected lifetime of the user. So when a user buys Robux, they're saying, oh yeah, we're not recognizing, like, if you just spent $100 on Robux, 100 real dollars to buy Robux, we're not going to recognize that $100 as revenue. We're going to recognize that over the expected lifetime of you as a user. And we currently look at the average user lifetime as 23 months. This raises a lot of questions. So, like, as of 9/30/2020, the average lifetime for a paying user was 23 months. This was the same as the end of 2018 and 2019. That strikes me as really weird, because shouldn't your user base be growing over time? Unless, of course, they really are like preteens or teens, where it's like, yeah, I spent a year or two of this in my teenagedom, and it was a phase, and now I'm moving on. In which case, like, does this mean you need to perpetually farm users to drive your growth? So that strikes me as a real potential risk, especially because they're saying, hey, we're calculating revenue based on if you spend $100 on that Robux, we're not recognizing it up front. We're going to spread it out over the next 23 months, because that's the lifetime of the user. This has huge implications for what you deem to be actually revenue, because if you're off by a month, give month or two, your revenue figures are going to be way off. And so how do you value Roblox when revenue is such a weird figure that's based on effectively assuming your user that's paying for Robux right now is only going to stick around for the next 23 months? And that's, should you use bookings or should you use revenue? Because bookings is much closer to the, hey, you spent $100 to acquire Robux, that $100 goes fully into bookings. So bookings is much closer to a cash figure. And so, the bookings versus revenue delta is huge. It's a 110% delta. For example, year to date, September 2020, you're looking at bookings of 1.24 billion versus revenue of 590 million. That is a huge difference. What you choose in terms of valuing this company, whether or not you're choosing revenue versus bookings, it's going to lead you into a different galaxy in terms of valuation. What about their margins in terms of thinking about, how do you think about this business? We've already talked about the complexity of revenue versus bookings. What about what are the major expenses that you're looking at? And once again, because they're using revenue, which is based on prior months' bookings and sort of smoothing it out over 23 months, their income statement shows that they lost $200 million year to date 2020. But once again, if you use bookings in their actual cash flow, they were free cash flow positive year to date of 292 million, free cash flow of 292 million, versus saying on their accounting basis that they lost $200 million plus. So that's a huge delta, $500 million difference based on looking at revenue versus bookings and actual cash generated. I prefer thinking about businesses on a cash basis, because ultimately, at the end of the day, accounting is supposed to help you understand what's the cash in and cash out over time. And so, let's look at these expenses, that they're calling out, where their cost of revenue is 26%. And keep in mind, these expenses are going to be linked to the same period that they're recognizing their revenue. And these expenses are actually really tough to sort of digest. Like, first of all, because it's an app that goes through the major app stores like the Apple or the Google store, they have to pay a 30% cut to Apple and Google, and a large chunk of their users, 50% plus, is going through there. So that's going to be a huge cut that they're having to pay. Then next up, developer exchange fees. That's effectively that 30% cut that they're paying their developers, or the cut that they're paying the creators as well for the avatars that they create. I said 30. So the developers get 70%, the creators get 30%. So that's what you're seeing here. So that's a huge percentage as well. And then also infrastructure and trust and safety, they're saying is 32% of revenue. That's huge percent. Like I see companies, and keep in mind, they're partly using AWS to fund that, to run their infrastructure. To say that infrastructure is 32% of their platform expenses, this is huge. And normally when I would think of this business, I would say, first of all, your cost of revenue, yes, this makes sense. Like paying your credit card fees, like the fees that you have to pay, that makes sense. The take rate from Apple and Google, that makes sense. That's going to be a large chunk, like 20 to 30% of your revenue is going to be, even bookings, it'll be that. The next, developer exchange fees, yeah, we know that it's going to be, let's say, between 20 and 30% as well, because that's the agreement that you're paying these developers that are creating 18 million experiences. They're the ones that are going to drive your growth. So automatically your gross margins are not going to be, let's say, more than 50%, I would think. So then next up, infrastructure and trust and safety, they're saying is 32. Once again, that maybe they get scale over time and that gets down to 5-10%. That's a huge, enormous number, 32% on infrastructure. I personally would expect that to go down. Let's say that's 10% normalized over time. Either way, you're talking about a real gross margin. These things I think you could all say are actually cost of revenue, because you can't generate any revenue unless your servers are up and running. The developers, they're getting paid based on these experiences they're creating. So I would think that really you're looking at a gross margin, for this business of maybe 35, maybe 40%. So it's a lot lower than what you'd expect for a company like Unity, where, the developers, it's a completely different model, much higher margins. Or a software company, for example, where you could be looking at 90% margins. So how do we think about the valuation? Well, recently, right before COVID, or right before it came to the US, Andreessen Horowitz, was valuing it around $4 billion. They helped raise 150 million. What a great timing, just because you had that exponential growth with COVID. And then recently you're seeing news headlines saying that Roblox could be valued at $8 billion, which is a nice double in just a few months for Andreessen Horowitz. Good. It's a good game if you can do it. So what are my thoughts on the valuation? Let's start with this $8 billion valuation, because I think a lot of people are very excited about Roblox. And so here, this is my value proposition for you, my loyal YouTube subscribers, where, I create this content and you have access to it most of the time. Sometimes I save the cherry on top just for my Journey subscribers. In this case, I'm sharing this with you as well, where let's say you have this 8 billion market cap in which it's valued. I'm not using the share count, because honestly, that can change a lot between now and then in terms of shares sold, and what are the convertible preferreds that are being converted. And so so let's use that 8 billion figure you see being tossed around. I prefer using bookings, because I like thinking about cash and thinking about the margins from there. And so they had 2019 bookings of nearly 700 million. Year to date, you're looking at 170% growth. So I'm penciling out 160 to 180%, range from, let's say, low to high. And long term, because I'm penciling out gross margins of, let's say, 30 to 40%, maybe their operating margins, this is a hypothetical optimized figure, like what could they be at scale and time? Maybe their optimized margins are 10 to 20% in time. In which case, you're getting a company at 27 to 59 times, hypothetical earnings or optimized earnings for bookings that are growing at 170%. So that would strike me as super duper interesting. And I think this reflects the big difference where I said earlier, if you're using revenue versus bookings, you can land in a different galaxy than others. And so then what's the growth rate that you're going to assume in the future? I wrote revenue here. It really should be bookings, of, let's say, 15 to 30% over time. That's a big question. Does this have the YouTube potential of being, let's say, 300 million daily active users in the future? And then, let's apply a range of 25 to 35 times future earnings, the future free cash flow potential. And in which case, if you're looking at an $8 billion valuation, the reality is I'm not penciling out that much downside. I am penciling out pretty attractive upside. It does strike me as really interesting risk reward at an $8 billion valuation. But honestly, this is just a hot take. The filing just came out a few hours ago. I'm still thinking about it, mulling it over to find out what I actually do. Do I buy the Roblox IPO? Is it worth buying, for my personal investment journey? To find that out, you do need to go to unrivaledinvesting.com, click on Journey. That's exclusive content for Journey subscribers. There's a catalog of content that I'm going to drop below in the description, so you can click, you can see the catalog of what I'm posting in Journey. There's an educational series that I'm slowly building out. And the aim is to find potential multi-baggers, every month. That's my goal. A multi-bagger is the type of company that could potentially go up hundreds or even thousands of percent over time. And the reality is, finding one multi-bagger can change your life journey. And so, if you're interested in following my journey to try to find these potential multi-baggers, go to unrivaledinvesting.com. If you enjoyed this video, please subscribe. If you're already a subscriber, hit that thumbs up. Thank you so much for watching.